I'm going to start with you, David, because you say the next 10% move in stocks will likely be higher, not lower, and you think the majority of the pullback has run its course and that stocks should be higher and meaningfully so over the next 6 to 12 months. What makes you feel that way? What makes you confident?
Well, the key point is perspective, and you mentioned investors really should have perspective. You can't get caught up in the craziness of the day. There's lots of news out there, some of it good, that's being ignored, some of it bad and worrisome, and that is what the focus has been. You've had a 10 to 15% correction. A lot of stocks are down 20%. The economy is actually, while it's slowing, it's actually pretty good. Valuations for the market are at 15 times earnings. There are a lot of great businesses at 10, 11, 12 times earnings. So what we'd say, it's difficult, if not impossible, to figure out the market over the very near term. But we think if you have a 3 to 12-month time horizon, stocks are going to be higher. We think the biggest problem right now is Trump and trade. It is self-correcting. If Trump ever realizes that trade really is a problem for the economy and the stock market, he might do an about-face and really try to solve the situation in China. And if that's the case, we think things are pretty good.
So, Grant, let's pick apart a couple of the things that David just said there. Last year, the market paid attention only to the good news and ignored the bad. This year, it feels like the market is ignoring some of the good news, says David, and paying attention only to the bad. That's number one. I'd like to get your thought on that. And also to what he concluded with, and that is that the fate of the market largely depends on an about-face by a president who has very rarely indicated a willingness to make about faces.
So I agree. I think the market does have a confidence problem. It kind of reminds me as being a Mets fan, a long-suffering Mets fan, of having Armando Benitez in the ninth inning with a lead. I think people are losing perspective that the market, we have a lead essentially, and the backdrop for fundamentals for earnings, for economic growth is actually quite good. But given some of the challenges that we face, whether it's trade, whether it's concerns over inverting yield curves, which we've yet to see, investors are skeptical. Our view is that we're not in recessionary territory for the next year, but the market is pricing that in. So it gives us a view that today is perhaps a good entry point for U.S. equity investors, given some of the volatility. But I would say that with the expectation that volatility is probably here to stay for the foreseeable future.
All right, Jason, your thoughts here. Wrap it up for us. I'm not saying we're done, but what are your reactions to what you've just heard?
Yeah, I can't disagree with much of what I've heard from Grant and David. I mean, if you look at the fundamentals of this market, whether it's the economy, whether it's record corporate earnings, whether it's low interest rates that are now lower than they were before we had the rising rate scare earlier in October, and then obviously earlier this year when we pushed through 3%, inflation in check, and valuation now under 15 times next year's earnings, which are earnings estimates that we think are achievable at sub 10%. You back out the tax cut, you back out some of the things that have driven the market higher this year, and we think that that's a decent core earnings rate that's achievable. So when you put all of that together and you say, where could the market go over the next year or two, it seems that a case could be made that we're oversold, and as long as the fundamentals hold in, this is going to be a garden variety correction. I mean, that's our best guess. And I think one other thing to consider is that we now have a Fed that's seems to be a lot more dovish, whether you look at Jerome Powell's speech a couple Wednesdays ago, or now we have Bostic saying neutral's right here, and I think that's certainly an incremental positive. So trade will be on the forefront of a lot of folks' minds over the next couple of months, and we'll see what happens there. But on balance, fundamentals look pretty good.